Thanks for tuning in to India Market Close right here on NDTV Profit. And it's a day which has been sluggish because the Nifty started off 0.03% higher. It is currently 0.02% lower. It's been as flat a day as flat can be. By the way, no big fireworks in the global markets as well. Maybe Europe can come up on your screen, US futures will come up on your screen, and you'll see that the world markets are kind of sluggish as well in the session today. No big gyrations across the European screen or for the US markets, wherein the futures were absolutely flat at the start of the trading day, and even currently just about 0.33%. So nothing great out here. Get the heat map up on the screen and show you what's happening on the large caps before Hersh takes it over for the broader end of the spectrum. Even Stevens, some of these stocks which are high flyers yesterday have come off, Bajaj Finance in particular. Aside of that, no big moves. So that is the one exception to the rule on the losing side. On the gaining side, some strength for Hero, likes of Nestle, Wipro, Titan, etc. have done okay, but no great shakes. M&M, which was in the red yesterday, marginally in the green today, TCS in the green today, but it's been a very sluggish, laboring along kind of a move in the large caps. Just at the broader end of the spectrum, Harsh, you have a lot more to talk about because there is defense. There are a few other pockets which are shining.
Yes, absolutely, Niraj. So defense counters, of course, let me start off with that queue. HAL, let's pull that one up, but along with it, Mazagon Dock, Cochin Shipyard, let's pull, if we can pull those up very, very quickly, have a look at those. HAL, of course, up 3.5%. Matrimony on the back of Buyback, looking very, very good, up nearly 10% in trade. Cairns, up 3.5% as well, but the defense counters overall, if we can pull those up, something like a Cochin Shipyard, there you go, 2.5% if we can pull up Mazagon Docks as well. That one will also show some level of an increase. Just in terms of the other buzzers, we'll look at Sterlite Tech, settled a dispute of $500,000 US in Singapore. That one is buzzing positively on the back of that. Medi Assist, some block trade. We had a private equity fund, one of their shareholders, exit a large chunk of their investment earlier today, and that one is holding up fairly steady. It was up much more through the day. Lemon Tree on the back of new hotels. Now some of those gains getting tapered off, but was doing very well earlier in trade. You're seeing also Brigade, QIP, the price being 1165 rupees a share, again was a strong gainer in early trade, but has lost out on some of those gains. Bajaj Twins in focus largely because of the Bajaj Housing Finance IPO. We'll talk a little bit about that, of course, on this show as well. Blocks, well, plenty of them. You have Star Health, Signature Global. We've had a month, at least last month, where we have consistently seen large chunks of block deals come through. Medi Assist, of course, one of those block deals also, but these are the two big buzzers in trade in terms of block deals today. Brokerage, lots of brokerage updates, and on the back of that you're seeing Aadhar Housing, what a strong move in trade today in a flat market otherwise, 7.5% higher. FM Industries also up on the back of a positive brokerage note. GMR Power, you had BNK Securities and Initiate Coverage, almost a 40% upside. Stock is up 5%. CEAT up 2% again on the back of brokerages. So plenty of stocks buzzing. Some, of course, on your screen on the back of other news as well, Niraj.
Thanks, Harsh. Okay, let's take stock of what do our experts believe could happen in the day today. Our guests will come up on your screen. Kush Bora on the technicals, Aditya Agarwala on the technicals as well, and Pankaj Pandey on the fundamentals. Gentlemen, all of you, thanks so much for taking the time out and being with us. Kush, I'll start with you first. How are you viewing the day today? Because it's been very, very flat with sporadic action at the broader end of the spectrum. So is it a very bottom-up market and therefore calls not as much on the index but on specific stocks?
Hi, a very good afternoon, Niraj, and very well summarized. I could very well hand it over to, maybe Aditya or Pankaj from here on. On a serious note, yes, we've had 13 straight sessions of gains, but if you see the last two sessions, they've been rather incremental. And if I break it down, if I see, the Nifty on, let's say, an hourly chart, there are very clear divergences emerging, which suggests that yes, consolidation is perhaps par for the course, at the moment. So I wouldn't go out and buy Nifty just yet. Anywhere closer to support zones of 25,000, 25,100 would be a more attractive bet. The broader view still remains the same, that we're looking at 25,700 and 26,000 as a target on Nifty. However, just to add to one point, and that's been a little interesting to note from say about noon to up until now, when I did the midday show, is that the 25,300 call, that's been adding quite a bit of open interest, but it's also the put that is starting to, gain some traction now. So there's a possibility that, we may not really go, too far down, maybe in the next, couple of days, because 25,300 will now perhaps act as a base. But yes, you're right, nothing on the Nifty yet, from a trade perspective. Any kind of a pullback towards 25,100 should perhaps be taken as an opportunity for a fresh entry. Otherwise, continue to hold your position.
Okay. Yeah, and we probably explained. So maybe, Aditya, not too many trades on the index. If you have a trade, then great. But couple that up with the stock ideas that you have for this afternoon as well.
Afternoon, Niraj. Actually, you're correct. There are not many trades in the index, to be honest, because of the way the markets are behaving. Though it looks like markets can correct anytime soon, but the price is not suggesting that. You're not seeing any kind of a price action on the downside. So it doesn't make any sense to take a short trade on the index. I would avoid taking a fresh long position in the index clearly because of the fact that I see overbought levels on multiple time frame charts. So I would not get into a long trade on the index per se. And to take a short trade, I would wait for some kind of a breakdown below 25,200 to initiate a fresh short trade. Having said that, yes, there are multiple opportunities. Pockets are outperforming, sectors are outperforming, stocks are outperforming. So the first stock on my radar is Titan. After a good consolidation, stock took support at the 200 DMA. From there, stock is bouncing back. I think it offers a good risk to reward at current levels. Can be taken a fresh long position at current levels for a target of 3830 on the upside with a stop loss at 3500 on the downside. The second is India Mart, a very interesting looking chart setup stock. If you take a look at last few months, hasn't done much for itself, but I think it's time to look at the stock. It's gearing up for a big breakout from an ascending triangle pattern. The first target will be 3300. If that is taken out, 3600 can also be seen near here with a stop loss at 2900. I think India Mart is something that should be looked at.
All right, let me go across to Kush. Kush, one quick question on technicals before I move to Pankaj on fundamentals. Kush, with regard to one stock or one set of stocks which have been big movers over the last 6 to 7 trading sessions, the Bajaj twins, we're seeing some bit of a cool off. We've seen Bajaj Finance down nearly 2.5% in trade today. What's the sense like on a couple of those?
Hi, Hersh. Well, I think Bajaj Finance, after giving like stellar returns over, for perhaps a decade or a little more for the last couple of years, has been underperforming. While, this move is very encouraging, if I draw a trend line across, let's say a longish time frame, then I think that resistance comes closer to 7,400. Now, for me, every time the stock has come closer to 7,400, in the recent past has actually been an opportunity to sell. And even now that is turning out to be so, perhaps even push it up a little to, 7,500 kind of zone. And with that kind of a stop loss, Bajaj Finance does continue to remain under pressure. While, the up moves on this have been vertical, it's not able to cross the 7,500 mark. So up until it does that, for me, Bajaj Finance will be a wait and watch. Bajaj Finserv, on the other hand, slightly different setup now. The gains that it has made, what we're seeing today is perhaps more of profit booking. I think it could resume, its journey upwards to 1950, perhaps 2000 levels also. So Bajaj Finance, I would perhaps even consider a short until 7,500 is taken out. And Bajaj Finserv is something that, you could consider a long position on with a stop loss of about 1,800 for targets of, 1,900 and above.
Very, very interesting. And Kush, your picks for this afternoon?
Sure, a couple of them. Given the texture of the market, we've got a long and a short pick. The long call is on Senco Gold. It's broken above that resistance of 1155, and now it's trading higher on the back of good volumes yesterday and today. So I think this near-term momentum, could very well continue to 1250 kind of levels, and your support zone and stop loss is coming at 1155. The short call is on Siemens. We know the entire space has been under a bit of a pressure. There was an attempt at a recovery today that fizzled out, that failed, and the resistance of the 20-day moving average close to 65.90 is also acting up. So if someone wants to consider a short position, I think Siemens is one stock to consider. 66.60, 65.65 are the targets. 68.80 is where you place your stop loss. Mind you, these are cash levels. If someone does want to trade futures, you could adjust these levels accordingly.
All right. But clearly, the set of stocks which are really standing out in trade today is the defense space. Several stocks seeing a positive session today. Anushi joins us to give us a breakdown of what's pushing these stocks higher. Anushi.
Hey Hersh, so multiple triggers that we are looking at for the defense package general. I'll start off with the first trigger, which is on the Hindustan Aeronautics side. Now what's happened over here is it has received a government nod to procure up to 240 of aero engines for Sukhoi. So this comes after the cabinet committee approval, and this will also contain about a 54,000 of an indigenous component. But it is a fairly large order size that we are looking at, 26,000 crore. But do note that the deliveries, while they're expected to start from next year onwards, this is a continuation. This will be a continuation for the next 8 years. So 8 years supply period that we are looking at over the overall. On to this, antique stock remains bullish on this one, seeing about a 31% upside and the target price of 6,145. Saying that the clearance of the Sukhoi engines has lifted the company's order book to an all-time high. The company's order book, if you see as of FY24, that stood at about 94,000 crore. So with this order in place, now that reaches to up to 1.2 lakh crore as we speak. Strong revenue visibility, over 3.8x of revenue visibility that we are seeing on its trailing revenue basis. Also, it believes that the stock is attractively valued. This is despite the near-term supply chain issues it currently faces for its Tejas aircraft. So that remains on a watch out for. Another piece that has led to this kind of rally is on the shipbuilding side. We are seeing counters like Garden Reach, Mascot Dock, and even a Cochin shipyard all reacting positively in trade today. This is on the back of the media report suggesting that the government is expected to clear mega defense projects worth about 1.3 lakh crore. And now this includes the Indian Navy plans of about clearing about 70,000 crore of contracts for building about 7 new warships, which puts focus back on stocks like Garden Reach and Mascot Dock. So these are the counters that we are seeing and why it has led to an overall rally and trade that we are seeing for some of these defense names.
For that, Anushi, Pankaj Pandey is with us. Pankaj, thanks for joining in. Thanks for your patience as well. Just wondering, this, after a really long slumber, defense seems to have found some mojo, or at least select pockets within defense are finding some mojo there. Do you like these shipbuilding names or the aeronautics play like HAL, for example? Is there coverage that you have here? Do you like any of these?
Hi, good afternoon, Niraj. Thanks for having me. I think you rightly pointed out that after a stupendous rally, what we have seen, we've seen some bit of a sideways and corrective move in most of the stocks. But defense is has a long tail for growth. For example, what we like in defense is HAL, where our target price is 5,700. Another stock what we like is Bharat Electronics, where target is 330 odd. So overall, if you look at in the defense space, even for HAL, I think while the order book was 94,000 odd crores, but the potential for further order placement is somewhere about 1.5 to 1.6 lakh crore, and some of it has come yesterday. And I think overall sense is that this is one pocket which can keep delivering a good sustainable sort of a growth rate over a period of time, given the fact that you have two neighbors which are sort of hostile and defense spending is here to stay. Only challenge is that when you look at from a valuation perspective, these stocks are expensive. But I think if we witness further correction or sideways movement, and if there is a further build-up in orders, I think this segment will sort of do well. And I think while we are not really liking the shipbuilding set of companies, but HAL and Bharat Electronics are largely because the component of electronics in most of the defense equipment is expected to go up from, say, 25% to nearly 30-35%. So I think these two stocks look structurally good to us from a portfolio.
Okay. In fact, we also spoke to Prabhudas Leeradhar's Amit Anwani on the outlook for shipbuilding sector as the demand for these remain high in spite of the high valuations. Listen in.
If you see the shipbuilding, the very typical nature is the long gestation period. Once they receive the order, their books are full for next 7, 8, 10 years for the delivery schedule. And that gives you a consistent revenue growth which shipbuilding companies can expect. So just giving an example, MDL, as you said, roughly about 39,000 crore order book. roughly about 9,500 crore top line, which they did this year. And this is coming because major projects are now coming in execution that delivered submarines in the past. So we are talking about few things, as you also highlighted, and the CMD also highlighted in the interview. One is the 3 additional submarine order which MDL is expecting, which should be more upward of 35,000 crore, especially for MDL. And there are a few destroyer orders which are expected, which again would be similar size. So if these orders come, the current 40,000 order book becomes 70, 80,000, and we have the visibility for next 10 years for the company with respect to the revenue growth, which has already happened, kind of 25, 27% in past 3 years, decent margin run up, which has also happened. So there's a lot of leverage which can happen in terms of number of line utilizations and the shipyard utilizations when they have the lumpy orders, and that also translates into the profitability for shipbuilding companies.
Pankaj, if I can come back to you, just with regard to valuations, do you believe that there is a certain set, maybe 2 or 3 companies within the defense pack where you believe valuations look slightly stretched? And is there a preference in terms of 2 or 3 names which you have in terms of value for the kind of execution that they may command going forward?
So when you look at some of the private counterparts like, say, Solar Industries or even Data Patterns, I think these are the stocks which we used to like earlier. They continue to sort of deliver very good in terms of performance. But somehow, like I said, the valuations are even more richer than what you see for some of these PSUs which I spoke about. So relatively, I think PSUs look attractive to us. I think one stock besides this could be Astra Microwave, which looks good to us, which again is supplies electronics, especially for some of the aircraft. So that is another stock which looks attractive. But in defense, given the sharp run of what we have seen, there is little comfort on the valuation. I think the PSUs are still better. At least you have a 3 to 4 time book in terms of order book, which is there. Then there is a potential for further build up in terms of order book. So growth, longevity is definitely there. Private.
Right. All right. Seems Pankaj is on a bad line. But let me come to you, Aditya. Just with regard to which, I'll probably ask you 2, 3. One is some of the shipyard stocks, something like a Cochin, something like a Mazagon Dock, and of course HAL. Anything in terms of technicals that you would recommend on any of these 3? A trade?
Not really, to be honest. I think most of these stocks had a sharp run up, Harsh, and after that we've seen a sharp decline as well. Look at the way most of these stocks had fallen off the cliff. I think this move that we are witnessing today could be one of a move, and you could actually have maybe stretch to another 5 to 10% for 1 or 2 names. But beyond that, I don't see the kind of run up that we had seen maybe a month back or a couple of months back to get replicated in all these stocks. Having said that, maybe the one stock that stands out for me is Mazagon Dock. You can see levels of maybe 4,700 to about 4,650 on the upside. But if I have to put my money on it, will I? No, I would wait it out for the up move to play out and then the next leg of correction to start before I get into any of these stocks. There are enough pockets now to look at rather than just putting your money in these defense shipping companies.
Okay. Kush, wager a trade in this space?
The only one that perhaps makes the cut is Solar Industries. I think Pankaj also mentioned this one. From a technical standpoint, whatever we call as the litmus test, the short-term averages, that's been cleared, that's been taken out. So if the up move does continue, then you're looking at an 11,800 and perhaps a 12,600 also on the upside, and a good support zone comes in about 10,500, 400 kind of zone. So offers a good risk-reward ratio, and perhaps this is the first one among the lot to clear, as I said, some of these key hurdles and make that the headwind. But yes, I do concur on this point that there isn't any kind of momentum in these trades just yet. But let me also then bring in this angle that if you're looking from a medium to a long-term perspective, then perhaps these kind of consolidation phases could act as a good entry point rather than the time when these stocks are perhaps hitting all-time highs or fresh highs, all over again. So from a medium-term perspective, while you could consider some of the other defense names, at the moment, solar industries makes the cut from, let's say a near-term trade perspective.
Right, probably the best way to play defense as per all of our experts. But let's switch focus. Kaynes Tech trading with gains. It's come off the day's highs, but was up at least 6% at one point after the government approved proposal to set up a semiconductor facility in Gujarat for an outlay of 3,300 crore rupees. Puneet is here to give us a breakdown of what this means. Puneet.
Well, thanks for that. Apart from the news that, it's semiconductors that the plant is setting up by Kaynes Technologies, there's another key aspect that they are adding, which is the second key initiative, which we also want to talk about, where these semiconductors will be used. But first, on the semiconductor, Cabinet has approved the investment of roughly 3,300 crores, as mentioned. This will help them, assemble, test, mark, as well as package 60 lakh chips per day going forward when this manufacturing plant comes into play. Now, the total cost of the project is 3,300 crores. Management spoke to us this morning. They say that this will be increased to 4,000 crores over time. And they are expecting a revenue potential of roughly around 3,500 crores by FY30. The medium-term target for the revenue is approximately 1,500 crores by FY28. Apart from that, they are mentioning that the operations will likely commence by Q4 of FY26 in a very meaningful way. That will be the first full quarter of revenue from this particular vertical. They have mentioned that they're already in touch with semiconductor players, and those will be the customers for Kaynes Technology through this particular venture. They've already started, negotiations and have 4 broad MOUs as well, which will eventually be converted to orders, is what the management expects. Finally, Kotak Institutional Equity, they wrote a note on it this morning. They've raised the target price of the stock to 4,950, which is close to the high of today. They mentioned that, Kaynes, this semiconductor approval is a potential game changer for someone like a Kaynes Technology, because the potential revenue of 3,500 crores is more than its current revenue overall basis in the multiple verticals that it operates. So that's one of the key things that they are watching out for. And second, on margins, global players operate around the 20% margins in this particular vertical, and they mentioned that Kaynes will also be able to maintain this. Now, just one word, where these semiconductors will be used in electronics, we know that that's the one thing, but these semiconductors are attached to something which we call as printed circuit board or PCBs. This is essentially the heart of an electronic appliance or something, and that's basically the base. Now, they will also be looking to manufacture these overall going forward. They've committed an investment of 1,400 crores in this particular vertical, and they are eventually looking to have revenue accretion from this by FY28 as well, roughly around 750 crores. So right now it's a pure play EMS company. By FY28, it is estimating that EMS will form 75% of the revenue, and they are backward integrating in these two verticals. That's the main positive about this company. So while Dixon has taken a complete EMS route, the second biggest EMS player, Kaynes Technologies, is backward integrating, and how. That's the news for today. Back to you.
Interesting. Okay. Thanks, Puneet. Thanks so much for putting that into perspective. In fact, speaking about backward integration, we spoke to the management today on this, as well as other details about the upcoming unit and how will it impact the company's top line in the upcoming years. Listen in.
See, our OSAT plant is going to be an assembly house, and it will have a test facility too. Now, we have planned a project for around 4,000 crores. We will be investing around 850 crores. So this is on the plant and machinery. Apart from that, there will be some civil works and all put together. So we are excited that government has given us the approval, and then we want to start. We feel we need a year's time for construction activity. We have acquired land. We have done our planning stage, so execution will start in a month's time. And from there, we will take for civil construction, and our first revenues should be up on the third quarter of 2026. This is what we are planning.
We get about 75% or close to that subsidies on plant and machinery from the central and state governments. The remaining is the investment that we make. For every rupee of capex spent, the potential for revenue is between 1 to 1.5 rupee. And that would depend on what kind of work that we do. We have planned to do about 25% of our capacity is aimed towards legacy product building, and then 75% towards advanced packaging, because we do believe that in the near future, the demand for advanced packaging is going to go up, and that's also more margin accretive being a very capital-intensive industry, we are very mindful of the fact that we should target for much higher EBITDA numbers. So it will be overall value accretive from the perspective of EBITDA, and also we hope to make it commensurate with our existing ROCs by making sure that we work on the upper band of revenues for this kind of, let's say about 3,300 crores is the kind of capex to begin with, and then we should probably hit about 4,000 plus crores of revenues, and that would happen over a period between 2 to 4 years. So FY26, fourth quarter is the significant revenue portion. Third quarter, of course, we commence the operations and get things together. So 27, 28, 29, 30 is when we ramp up to the highest potential for this business.
All right. Well, bullish in terms of commentary and in terms of opportunity. Let's quickly go to Pankaj. Pankaj, your views with regard to Kaynes Tech or some of these EMS plays?
So we don't cover these companies. Historically, we used to cover something like Dixon and Amber. But I think somewhere down the line, the challenge, what you realize is that do they have the bargaining power to sort of maintain the margins? Because when you make very thin margins, asset turnover becomes the key, and if margins does not get maintained, then that is where the challenge lies. So we don't have a coverage on these companies.
All right, Kush, your view with regard to Kaynes, the kind of move it's made, would you wager a trade? And if not within the EMS pack, any others that you look at?
Well, I think Kaynes, after the kind of move that it saw today, in the sense that, it gave up most of the gains. But if you see from, just a pure technical standpoint, then it's now again taking support at the 20-day moving average. Now, for the last couple of months, if you see, for the most part, it's respected that or maybe slipped just below that and recovered fairly quickly. So I think from that perspective also, it's not a bad idea to consider Kaynes itself. 46.50 would be your near-term, stop loss. On the upside, you're looking at 5050 once that is taken out, perhaps even a 5200 as a target. So Kaynes Technologies, taking support at the 20-day moving average, despite the kind of profit booking that it's seen from the top, that does make a good positional bet from here on.
Okay. Well, I have a question for Aditya, but we'll have to take a break right now. So I'm taking a break, viewers. But a lot of stocks flying around. So just before we hit that break, keep in mind, because some of these stocks is what we will talk to Aditya about as well. Munjal Auto, pull up that one, has seen a big surge in the last few minutes. Look at that spike. 4% uptick, just that spike that has come in. Insurance companies are not doing too bad. ICICI Lombard, HDFC Life, all of them have had spikes again in the last few minutes of trade. ICICI Lombard more certainly, but I think HDFC Life too. So a bit of a spurt coming into that as well. There is strength in Asahi India Glass. So that's the other one, which I think is showing a bit of a spurt. So some of these stocks are just flying around. Actually, maybe we take a break. We come back and talk to Aditya Agarwala about some of these names. Stay tuned. We'll be right back. All right, back with India Market Close right here on NDTV Profit. Before I go to Kush Bora on JM Financials, because it was an idea of his yesterday, and the stock is up 10% or thereabouts, or maybe more. But I want to come to Aditya Agarwala on life insurance names, because life insurance companies have shown a spurt. Aditya, HDFC Life, SBI Life, and Lombard, not a life insurance company, but an insurance name nevertheless. All of them have spiked. Is there a trade here?
Definitely, Niraj. I think all these life insurance companies are looking very good on the chart setup. HDFC Life and ICICI Prudential actually are looking very good on the chart setup to me. If I talk about HDFC Life, I think 800 could be the target here with a stop loss at 740 on the downside can be taken, and ICICI Prudential with a stop loss at, again, 735 can be bought for a target of at least 810 to about 820 on the upside.
Buy insurance names at the current levels after the spike is what Aditya is saying. Kush, for people who bought JM Financial on your call yesterday, book profits or stay long?
Oh, for sure, stay long. I think 118, 120 was the target that we discussed yesterday. Wasn't expecting it to hit so soon, but now that it has, and the stock is still comfortably away from the overheating territories. The volumes are also rather good. I would say now you place your stop loss or trailing stop losses close to that 113 kind of zones. Continue to ride this momentum, and on the upside you could be looking at 126 and perhaps 132 kind of levels as the next target. So continue to ride. There is good volume action in the stock along with the price action.
All right, we're well past 3 and Agam is standing by to break down the F&O cues for the day. Agam, what's the F&O data indicating?
Well, we're actually interestingly looking at that expiry move. So that expiry move started somewhere around 230 on the Fin Nifty, and since then it has just been one way up because that in fact we're actually looking at a lot of traders now losing out on those potential calls that they may have sold on the Fin Nifty. I'll come to Fin Nifty in just a bit. I'll start by taking a look at the Nifty 50, which is now in the green, and should we end the Nifty 50 in the green, then it's going to be the 14th session where we have seen in the Nifty advance. Well, about 2% added in open interest there. The Bank Nifty as well in focus. Shall we have the Bank Nifty? And that's where we can perhaps see. Okay, so about 0.4% advance there. Now, this is where the expiry trade is playing because, well, we all know that the HDFC Bank, ICICI Bank, Axis Bank are heavy weighted companies, not just on the Bank Nifty, but on the Fin Nifty as well. Let's move on and talk about the options market. The Nifty 50, again, we're starting to see a lot more traction with respect to calls and puts being written higher at around 25,300. This activity has shifted all the way from 25,000 last week to now at around 25,300. And on the higher end, we continue to see writing around 25,500, 600 and 700 calls being written. But if we can pull up the Fin Nifty, options, that's where things are getting very, very interesting. Now, well, until earlier on in the session, we saw all the activity around 23,700 and 23,750. And there was a significant amount of calls being written. But as you can see, all those calls have been unwound. And now it does seem like we're going to see the Fin Nifty end up was somewhere close to 23,850 and 23,900. That's where it is. So a lot of these guys who had written those calls are now deep out of the pocket in terms of their funds. Well, one can only hope that their positions were hedged because this move came very, very sharply and in just the last half an hour of trade. And this tends to happen during any expiration, and it does seem like today was one of those days. Well, finally, let's talk about stocks as well. And well, we saw longs in SBI Life, we saw longs in JK Cement, Ipca Laboratories as well. Among stocks, we saw unwinding. Again, let's pull that bit up as well. About a short covering for Deepak Nitrite, Navin Fluorine, as well as MGL. So plenty of action. A lot of this has turned for the positive in the last half an hour of trade. Wait and watch whether or not this was in fact just an expiry move or was it beyond that.
All right, thanks for that, Agam, for breaking all of that down for us. Kush, let me come to you. The Fin Nifty move, which Agam was just explaining, any strategies around that if someone is caught on the wrong side of the trade?
The kind of moves that we've seen today is more or less, the kind of moves that we've seen across expiries as well. If if the current expiry option is something that you've had, I think it's a little too late to play any kind of hedges on this one. So my suggestion is that if you've got a positional trade on this, then continue to hold and ride your profits. But other than that, as I said, if it's the option today expiring today, then it's a little too late to hedge.
Right, a little too late. Now, a couple of stocks which are buzzing, which I want to quickly take note of. Matrimony, on the back of a buyback, up nearly 10%. There you go. We've cooled off. We're at the day's low, in fact, where Matrimony is concerned. But let me come to you on this one, Pankaj. We've seen a slew of companies, come up with at least a consideration for buyback before that 1st October deadline for tax purposes. What's your sense like? The moves that have been made on most of them have been extremely strong. Would you advise caution at this point with regard to at least some of the moves that are being made on the back of these buyback announcements?
Absolutely. I think buyback is just a way to sort of reward shareholders. So, for example, Matrimony, again, when you look at the industry is still sort of competing on prices, the kind of ad spend, so what they do as a percentage of their top line is still sort of quite high. So unless the pricing scenario does not improve, you really cannot turn bullish on the stock. And buybacks really do not help in a big way in terms of changing the course of the company. So from that perspective, buyback is just a sort of a incremental way to sort of reward shareholders. It does not alter the overall fundamental trajectory of the stock.
Yeah, well, that certainly is true. But 7.5% up for this one. It's not doing too badly for itself as we speak currently. Okay. What else? Just trying to spot stocks in which there has been moves. V-Guard has had a bit of an up move too. Interestingly, Geo Financial is marginally higher as well. So there are a few stocks. We should get a V-Guard and we should get GeoFin. Both of them have had a bit of a move for sure. TVS Holdings, a bit of a move as well. So watch out for some of these names. Lastly, LT Foods has had this very sharp spike too. Some stocks are really flying around. But there are two stocks which are doing well, but which have continued to do well through the trading day today. And Hersh joins in with a view on at least one of those, if not both. But Hersh, I'm really keen to know about GMR Power to start off with. Of course, Aadhar Housing Finance has done phenomenally well too. But why don't we start with GMR Power?
Well, yes, absolutely. So let's first break down what BNK is suggesting with regard to GMR Power, because that's the reason why the stock is a buzz. They've given it a target price of 184. The stock's hit upper circuit there almost through the day. Now, what they seem to be suggesting is that there's been a demerger of GMR Group. The airports business is now listed separately. This one is going to focus on energy, EPC, as well as transport. Now, given that most of the sectors within this ambit are going to do very well going forward, they're quite bullish overall. Let's talk about what GMR Power currently has. They've got installed capacity of 3 gigawatts and they've got 2 gas-based plants of 1.1 gigawatt as well. Now, just in terms of the government's push towards the power and the renewable energy space, this one will be well placed, according to BNK, to tap into that opportunity. They are also actively developing urban infra projects. They've got 3 highways, 2 of which are under the BOT model, 1 is under the toll model, and all of which are operational. Of course, the number of contracts coming with regard to this particular space in itself presents a very big opportunity to something like a GMR Infra. Last off, they've strengthened their balance sheet itself, reduced their debt. $275 million of foreign convertible bonds have been converted to equity, and that rejigs the balance sheet, which now looks stronger than what it used to. And therefore, this presents a solid background for the company to fund some of the growth ambitions that it has. They've given it an SOTP valuation of 184, mind you, which is extremely strong. So therefore, this one looks very, very interesting on the back of that note. Up 5%, locked in upper circuit. Very interesting to see what it'll do tomorrow in trade once that circuit gets unblocked.
Yeah, well, we'll watch out for this. And, I'll also ask Hersh to highlight for us Aadhar Housing Finance in a bit, but GMR Power first. Aditya, big smart up move today. Any thoughts there?
I would not, if I just purely go by the chart setup, Niraj, too overbought, to be honest. Stock has been on a one-way rally from 30 odd levels to about 140 with intermediate dips. But now at current levels, I would not be a buyer at current levels. If I have already owned the stock, maybe I will continue to hold with the trading stop loss close to about 130. But at current levels, I would avoid getting into the stock, just purely going by the chart setup.
GMR Power. Pankaj, what's the idea at your end on this whole power distribution T&D space? A mid-cap or a small-cap stock, not a large-cap name like Power Grid, but any mid-size names that you guys like?
So, Niraj, what we like in the T&D space is Kalpataru Power projects also with a target price of around 1630. Now, they've got an order book of somewhere about 57,000 odd crores. So, with execution, you should see a good double-digit kind of a 23-24% kind of a growth in top line. And I think the company is also looking to monetize some of the road and real estate asset. I think the overall expectation is that they could end up raising about 500 odd crores. So that is one stock which we like in the power T&D space.
Okay, well, Kalpataru Power, but that's the T&D name, of course. Not all of them would be that, but yep, some sharp up moves. Godrej Industries is on a roll. Well, Kalpataru Power projects is okay. Godrej Industries is 12.5% higher. I think the whole Godrej group today has had a good move. Godrej Agrovet, if I'm not wrong, was also in the green. I don't know if Godrej Properties would be, but Godrej Agro, there's one more Godrej name which is doing really well in the session today. Kush, any thoughts here on Godrej Industries in particular?
Slight regret, if I can call it that, because this stock came on our radar about a week ago. When there was this big surge on this, consolidated. Let's start converting it into a call. That's the only slight regret, if I can even call it that. But now I think it's too stretched. I think any kind of tip towards, let's say, 1140, 1150 kind of zones, perhaps could be considered as an entry point. Otherwise, the momentum's too strong. The volumes have picked up from yesterday and today. Today the volumes are higher compared to yesterday. So I think you should continue to hold on, ride the momentum if you've got it, but fresh entries, no, not at the moment.
All right. The other stock in focus, we had Aadhar Housing, we had Kotak Institutional initiate coverage on this one. 550 being the target price, 40% upside versus yesterday's close. Of course, the stock on a tear today in trade. Now, let me quickly take you through what the note seems to be suggesting. One is that Aadhar's book is relatively larger compared to some of the smaller peers in the housing finance industry per se. Can't compare a Bajaj Housing, just caveating that, because Bajaj Housing's book is just well above and not comparable to Aadhar. But nonetheless, 21,000 odd crore is a solid large balance sheet which can continue to grow. And basically, that's what Kotak Institutional seems to be suggesting. They are saying also, and I speak about asset quality, and I quote, combination of centralized underwriting for salaried and decentralized underwriting for informal profiles, along with dedicated collection teams, underpins its low NPLs. And that's what Kotak finds, something which stands out for them. So therefore, one, larger size, given the kind of industry that they are in versus competitors. Second is lower credit cost. And therefore, they believe a 3 times price to book is warranted. They've given it a 531 rupee target price on the back of that, which is roughly 3 times price to book FY26. That's what they are essentially looking at. Therefore, they are finding this as a very, very interesting bet. Beg your pardon, 550 being the target price. They've given it a very, very solid 40% upside. But let me take this quickly to Pankaj. Pankaj, housing financiers in focus. You're looking at a Bajaj Housing. If I can couple both of these together, Bajaj Housing, would you subscribe to the IPO given the kind of price that it's at currently, 3.7 times odd current price to book? And what do you make of something like an Aadhar?
So I think IPO we don't really sort of recommend, largely because you need to see stock over a decent period of time to sort of come up with a view. But I think if you look at from within BFSI space, non-banks, then I think what we are liking is say SBI card, because I think burst is largely there in the prices. Probably the cost of funds will sort of come down, and that will sort of lift the ROEs. Then we are liking specialized NBFCs. So, for example, IRDA, because our sense is that this is one company which can deliver 30% CAGR kind of a AUM growth. Then within NBFCs, what we are liking is something like, say, Shriram Finance or L&T Finance. I think these are the companies which are sort of migrating from to a more broad-based retail NBFCs rather than sort of wholesale NBFCs or one particular dedicated vertical dedicated NBFCs. And Bajaj Finance and FinServ obviously derives bulk of its value from finance. So I think Bajaj Finance used to do very well when we had very few companies or most of them were sort of wholesale NBFCs, and Bajaj Finance was the only retail NBFC. Now you have multiple options. So Bajaj Finance, according to us, should consolidate. And I think we are liking, like I said, these other NBFCs and other business models.
Very interesting. Niraj, interestingly, Bajaj Finance has been the top Nifty 50 performer over the last 20 years. It's been a 900 bagger. So it's just been...
Recency, though, has not quite been in favor.
Maybe the last couple of years. But outside of that, even over the last 10 years, it's been a 200 bagger.
Yeah.
So really no... I mean... I'm not sure if investors have reason to complain.
Except if you were an investor. It's much like how Asian Paints investors have been complaining now for the last 3 years that, hey, our money has not been made. I think high quality franchise, but hasn't made wealth in the... Actually, can we pull the 2-year chart for a Bajaj Finance, 1 year or a 2-year chart for Bajaj Finance before we shift focus to stocks which are buzzing today? But I think the Bajaj Finance price has been circa this 7,500. Look at that. So from mid 2022, or let's say starting 2022 onwards, it's been 2.5 years that Bajaj Finance has been roaming around in this between 8,500 to maybe 6,000 band and not quite showing upsides. Therein lies the problem. 5 years, 125% is a CAGR of maybe what, 15% or thereabouts, if I'm not wrong.
Yeah, maybe 17, 18%.
Yeah. But this one, the last 3 years, last 2.5 years hasn't quite created wealth, unfortunately. But hey, Hersh,
there's
a stock which is creating wealth today.
Yes, it is. I don't think so. It's 2.5% lower, but the last 1 month, the stock has been on a tear, up 11% in the last month, and most of those gains have come in the last week. So if short-term...
No, I'm talking about the next one that we are going to talk about.
Oh, yes. So, okay. So the next one is FIEM. So let's go to that one because the stock is up and away in trade. Kotak Securities initiated coverage on the stock. Puneet joining in with all of the highlights from that note. Puneet.
Well, thanks for that. So, FIEM, very efficient auto component company, and Kotak is highlighting 3 key things. They've initiated coverage with a buy rating, target price of 2,150 rupees per share, which is around a 30% upside from this current level as well. Now, they're highlighting that, FIEM well placed to benefit from the two-wheeler growth, and in this particular year as well of FY25, we've seen two-wheelers outpace four-wheeler growth by a long margin. So, FIEM would be one of the key beneficiaries, what Kotak says. 2 key points that it's highlighting. Rising trend of LEDs going forward in motorcycles as well as other two-wheelers will be aiding margins as well for the company as well as revenue growth, and adoption is higher going forward as well because of customer preferences. The second key thing, passenger vehicle segment provides significant growth opportunity for the company, roughly around 80% of revenue coming from the two-wheeler space for FIEM. So definitely a big growth lever for the company going forward in the medium term as well. They're finally, earnings, they're estimating 19% growth CAGR over the next 3 years for the company, and valuing the stock at roughly around 20 times this price to earnings for FY27. So a really good franchise in the two-wheeler auto component space to take exposure to. It's not the fastest growing auto component maker, but definitely one of the most efficient ones. Back to you.
Well, talking of two-wheelers, Hero Motor is the top gainer on the Nifty 50 today, but we'd stick with autos. Bajaj Auto, the next one on our radar. Stock has hit a life high yesterday after the company posted robust August sales. Caught up with Rakesh Sharma earlier today and asked him what's aiding this domestic demand, this surge. and what the outlook with regard to sales is like. Listen in.
There have been at least half a dozen product launches ranging from the 125cc to the 400cc, which have split this 50% of the motorcycle business into different sub-segments. And all of these product launches, almost all of them, I think, have performed very well. So in combination, they have gone towards expanding our sales and providing a growth. And on top of that, the new CNG bike, which obviously is again not a one-off, but it is something which is a very substantive initiative into the value-conscious segment, which spans the 100 to 125cc landscape. And that has brought in incremental business. And we obviously therefore expect that as the Indian industry starts to be in the positive zone and continues to do well, we should, because of these things, continue to grow faster than what the industry is doing.
All right, Pankaj, let me take it across to you. Two-wheelers in specific, but outside of that, auto. Attractive at all? And if so, what are you looking at in terms of ideas?
So besides large cap names like say M&M, which we like because SUV is one segment which continues to sort of do well. I think what we are sort of liking within the auto ancillary space is something like Amar Raja, where we have a target price of 2,000. Then I think other ancillaries like say steel strip wheels, we are liking because this is one company where overall the company does not carry any kind of EV risk. And I think what we are also liking is Sansera within the forged component space because this is one company where we feel that the top line can grow at 15-odd%, bottom line even more higher at about 32-odd%. Steel strip wheels, for example, from a valuation perspective is also quite attractive. So even though we are valued at about 18 times, but I think we get a fairly good upside of with a target price of say 30.
Okay, last 6 minutes left, so let's take in the closing strategies. Aditya, anything's changed? Any stock that has caught your eye? Non-insurance, by the way. Actually, it could even be an insurance name if you want to re-recommend it. But one top closing strategy.
I think, Niraj, it's a non-insurance name. That's okay. It's a forging company. Rolex Rings is looking very interesting to me on the chart setup. Excellent set of volumes, 5% up. As we speak, I think the stock is trading at days high. For a target of 2,800, one should definitely look at a fresh long position in this stock at current levels with a stop loss at 2450, 2470. Looks like a good up move is on card. Second is MFSL. That is also looking very interesting to me on the charts. So at current levels, MFSL can also be bought for a target of 1,200 with a stop loss on the downside at 1,100.
Sorry, so Mahindra Finance you're saying, right? Or Motilal Oswal?
No, Mahindra Finance, Niraj.
Mahindra Finance, yeah. I just wanted to correct that, viewers. It's not Motilal Oswal, but Mahindra Finance is what rather Aditya seems to be liking. So keep that in mind. In addition to Rolex Rings, which is up 5%. Kush, what about your top closing strategy?
So, Niraj, this is also an update. You know, we've had a discussion around Vedant Fashions, and this wasn't too far back. This was on Thursday when we discussed this stock. It was about 12.25 that the stock was trading at. 12.75 was the second target. Today it's hit that. The momentum continues. The volumes continue to stay impressive. I think you could continue with this trade. If you haven't got a position, I think you could build one for the next targets now of 12.95 and 13.30. 12.50 will now start acting as your stop loss.
All right. Kush, any picks within the auto space? We were just speaking about auto, so I thought let me try and squeeze that in.
Well, from two-wheeler space, a couple of names look good. Bajaj Auto perhaps will consolidate for some time. But TVS Motor, I know it's on the way down. Yesterday, we saw some profit booking. Today, also it's seeing a round of profit booking. But I think once this stems, this will convert into a call where you could look at 2,700, perhaps a little lower as your stop loss, and then 2,850, 3,000 rupees as your target. More of a positional bet. Just wait for this round of profit booking to be complete, and then I think the stock will resume its uptrend. So not a call, but certainly a stock that you'd want to keep on your radar.
Can I extend that, Aditya? Take a question on Mahindra and Mahindra from you, because yesterday the stock corrected about 1.5%, has found its way back a little bit. But the auto numbers seem very good there relative to some of the others. So what do the charts suggest?
More of a sideways consolidation, Niraj. I'm not too gung-ho excited in going long in Mahindra at current levels. I think it will enter into some kind of a time consolidation between the band of 2,700 on the downside, about 2,900 on the upside. For some time, we're going to see this kind of a move in Mahindra. Not too gung-ho here at current levels.
Okay, Pankaj, any particular space pocket which you are finding really good, really attractive in this market?
I think infra is one space where we haven't seen much of an action, and I think post budget, our sense is that in the second half you'll see a lot more announcement in terms of order being given. So what I will sort of prefer is something like MCC with a target price of 400. Then I think Kalpataru Power Projects is already I have sort of highlighted, and in tier 1 names, if I have to sort of suggest, it will be L&T.
Okay, gentlemen, all three of you, thank you so much for taking the time out and being with us on the show today. Really appreciate and see you more during the course of the next couple of weeks. But let's start wrapping up the markets for you. 2 minutes left for the markets to shut shop. Keep in mind, we are ending very quiet with most other things also looking very, very quiet. So it's not that we've had a gung-ho move in the rest of the markets across the world or otherwise. And the market breadth, very quickly before we move on to the heat map once, has kind of been steadfast, but off from the highs of the day. As you can see, it started off really well, but it's cooled off and come almost even Stevens. It is even Stevens. Okay, heat map, and you will see on the Nifty at least, more red than what was the case otherwise. And stocks like Infi, ONGC, Adani Ports, HCL Tech, IT's taken a bit of a pull back in the session today. Reliance too in the red now. What is thwarting that is stocks like ICICI Bank, SBI Life, HDFC Life. So in some sense, financials doing well, and oil and gas, Infosys, etc. not doing all that great. Just before I give it to Hersh, bring up the Nifty IT chart or an Infosys chart intraday, and you will see what I'm talking about, because I think IT seems to have just dragged the indices lower. Look at that, Infosys, and the last 20-30 odd minutes, a big slide out here. Hersh, what about the broader end of the spectrum?
Well, it's a very similar kind of a picture. You're seeing mild bit of green, especially on the broader markets, but we've just clocked the day's lows, and we're just off that, especially on the mid-cap index. The small cap too, somewhere finding some amount of resilience, around 0.5% higher. In terms of where we are sectorally, if you can pull up the sectoral heat map, see which sectors were doing well or are doing well. You're seeing the Fin Nifty see a bit of a spike in the last hour or so of trade. The private banking index is doing fairly well, but Nifty Pharma has given up pretty much all of its gains. Rather, it was doing very well for most of the day. It's given up pretty much all of the gains. But outside of that, we've had an otherwise tepid day of trade. The other one is the Nifty FMCG, which is closed around 0.25% or thereabouts lower. That one also was doing fairly well in trade. So both of those indices seem to have gone home with just about either mild gains or mild losses, which were doing well actually. Let's pull up the BSE 500 in terms of the specific names which are buzzing. Godrej Industries up 20% at close. JM Financial did very, very well. Bombay Burma up 8.5%, but some defense stocks did well, including the likes of a Mazagon Dock. Some which didn't do well, you had the likes of a Spark which was down, Z Entertainment down 3.5%, but nothing significant in terms of negative moves. With that, completely out of time from Niraj, myself, everyone who puts the show together. Thanks so much for watching.